welcome back here to What's Cooking Today, the nation's food, wine, restaurant, travel, entertainment, health, and business show. And what do we have coming up next here, Debbie Barrera, along with Michael Horn?
We have Gene Goldman from CRN Investment Management on the show.
Gene, welcome to the broadcast.
Thank you, Mike. How are you doing?
I'm great. Gene, everybody, is responsible for the strategic direction and continued growth at his company, Satira Management, and he's got the research offering. He provides day-to-day oversight of Satira's investment management, a focus on providing unbiased research about the economy, the financial markets, asset allocation strategies, and more. He's got 24 years of experience. He worked at LPL Financial prior to that, 2 years at Liberty Financial. He is the real deal. So, Gene, the market, we're in the middle of the year, for God's sakes. Here it is, June. And you're saying, despite all these trade concerns globally, the markets still have room to run here. Tell me about it. What do you mean by that?
Yeah, I think we're I guess what you could term as cautiously optimistic. We keep in mind we are in the longest bull market ever. Great news, but then we're starting to see some mixed signals going forward. Like, for example, economic data. We're still expanding. Data looks good, but starting to slow down. So, for example, like unemployment rate, we're at a 50-year low, but then consumer confidence came out today at a 2-year low. Second of all, valuations are up there. Stocks are a little expensive, but, we could see some weaker earnings growth, so that could put some pressure. And third of all, the bond market is really saying something mixed. On one side, it's saying good news, especially when you look at riskier debt. On the other side, it's saying we're a little worried about down the road, especially when you look at treasuries and the fact that short-term yields are above long-term yields.
Gene Goldman, our guest from Satira Investment Management. And so you're saying cautiously optimistic here on the mid-year report. Are these some of the, like the bonds and stuff, are these some of the key forces that are contributing to that situation, that cautiously optimistic feel?
Yeah, I think a lot of those are too. Plus, I think the key, let's just say, what would make us optimistic? Optimism is, three things. We have the Fed is on our side. They've suggested they will cut rates. They said cutting rates is appropriate when necessary. Second of all, we do think data is okay. It's not like it was back in 2007 where we saw data fall dramatically going into Great Recession. So data is good. Employment's 50-year low, as I mentioned before. And the third thing, we think the trade war will be resolved soon. This weekend we have the G20 meeting. The U.S. and China are expected to sit down, and both sides are heavily incented to end this as soon as possible. Caution comes into play when you look at Europe is not doing that great. When you look at, again, some of the weaker data that we're a little worried about. Also, the jump in gold. Gold is at highest level since May of 2013. That means people are saying, I want to lock in a safe metal in my portfolio.
Yeah, and I think you just tapped on maybe as an investor, probably one of the big concerns is this U.S. trade dispute that's going on. You say it's going to be resolved soon, you feel. What are the indicators on that? How do you come up with that?
Sure. And in life, nothing is guaranteed. So, obviously, if I can come back on your show if I'm wrong, I'll definitely apologize. But I do truly believe it's going to be resolved soon. Number one, economic data has been so weak. Number two, the stock market is really affected by it. So you look at May was really down because, trade war rhetoric increased. And we all know President Trump is very focused on the stock market as a real-time indicator of how he's doing. But the third point, I think, is the most important point. Demographics in China are really struggling. So right now, given the one-child policy that ended in 2015, very aging population, China's trying to convert to a consumer-driven economy. That's not helping, and you have a trade war exacerbating all of this. Let me give you one stat. 2017, lowest birth rate in China since 1961, and it's had huge ramifications on consumer spending. Yeah, it's crazy, right?
Wow. Yeah, Gene Goldman, our guest here. We're getting some good education. He's with Satira Investment Management. Here's the thing I think about the whole U.S. trade thing, and that is, our economy suffers a little bit, especially the farmer. I think President Trump has got to get in there and resolve this because the farmer's hurting a lot here, and I think he wants to make sure that's taken care of before an election too. Wouldn't you agree?
I definitely agree. I think we all know that he has to win those key states in the middle, and the farmer is really struggling. His voter base, auto workers are struggling too. So that's another reason why we think the trade war will be resolved. He wants to win 2020.
So, how you're an investment management person here from Satira. how should investors, how should I, if I want to look at this, how should I position myself in this kind of current, cautiously optimistic, volatile market?
That's the age-old question, right? I think the key point is...
help us out here. I know it's just, and again, check with your own person, but give us a tip, Gene. Come on.
I think my biggest tip, you're going to say it's kind of lame, but my biggest tip is, listen, we are in the longest bull market ever. Some stocks, some valuations have gone a little ahead of themselves. So if you're a long-term investor and you've been, say, 60% stocks, 40% bonds, clearly the strength in the stock market, now you're maybe 70-30, maybe you're 80-20. Use the opportunity today to rebalance back to your longer-term targets. Take some of the profits off the table. Go back to your original targets. So if you're 80-20, come back to 60-40. It's okay because volatility is picking up. We do foresee this, and it's okay to take some profits off the table.
Love you, Gene Goldman. You're welcome on this show anytime. Where can we go to get more information?
Sure. Easiest way is on Twitter. We have a Twitter handle. It's Cetera, like CETERAIM, like investment management. And we post things throughout the day about the markets, about the economy, lots of great information for your listeners.
All right. So the website is Cetera.com, CETERA, but the Twitter feed, CeteraIM. And check that out because stuff is posted up there all the time. Cetera is CETERA. CeteraIM on Twitter, Cetera.com on the website. Gene Goldman, as I mentioned, don't be a stranger. Thanks so much for enlightening us. We'll be back with more on What's Cooking Today. Michael Horn and Debbie Barrera.